G'day folks, welcome back to another update for the S&P 500 and the NASDAQ. Now they both looks like they're hitting resistance. We'll go through the charts in a minute. Before we go any further, make sure you hit that like and subscribe button to support the channel. First, the outlook for the valuation of the S&P 500 is trading approximately 22 times the expected earnings over the next 12 months, reflecting anticipated 12% annual earnings growth for the next 5 years, which is historically uncommon. Earnings growth, the Magnificent Seven, Apple, Amazon, Alphabet, Meta, platforms, Microsoft, Nvidia, and Tesla have achieved recent earnings growth rates over 20% per year, justifying their high valuations. In contrast, the remaining S&P 500 companies need to grow earnings at 8% annually to earn a normal risk premium, but have historically achieved only 5% growth. Inflation impact. Despite recent concerns from a high consumer price index report, the producer price index indicates that inflation is still falling. Businesses continue to demonstrate pricing power, with consumers accepting higher prices for services. For market performance, the S&P has gained nearly 70% since late 2022, while the NASDAQ 100, dominated by high-tech giants, has also shown significant growth. For sector concentration, the S&P 500's performance is heavily influenced by major tech companies, with the top 10 stocks accounting for 33% of the index's value in 2024, surpassing the 27% concentration during the 2000 tech bubble. So first look at the S&P 500, and we always look at the long-term charts in terms of the trends on the monthly, the weekly, and the daily. Now, I've got these moving averages, and they're available in the description if you want to learn how to draw those moving averages on your own charting software. But on the monthly, you can see here the S&P has actually inched higher since our last update. So we're going to move that trend line slightly higher. This target range is a minimum retrace it's going to hit if it does when it starts falling, and it will start falling at some point. We had a pullback here during that period, and that was due to the this previous long-term bearish divergence. We've got a smaller range, or actually it's still quite a long range over a few years. You can see there the CCI is still falling, and that hasn't changed. The CCI has fallen from our previous update. The price has gone up, so that's a bearish divergence. So I'm going to leave that target range there. It won't change much from when we last drew it, but at the moment the price is still rising, but the CCI is slowly dropping on the monthly. On the weekly, we've got a similar situation, and these are independent divergence from each time frame. We've got lower highs on the CCI there. You can see it there. It's still dropping. It's below our moving average range on the weekly, versus slightly higher highs after dropping initially. It actually touched that minimum range there, and that would have been drawn, if I drew a Fibonacci, we draw it back, take it back to the previous low before that divergence started, and that's at 23.38% level. So you can see there it's already hit that range, but notice the CCI is still dropping and the price is still rising. So we could actually probably start drawing another slightly higher highs on the price versus lower highs on the CCI. It's hard to read that there, but it's lower highs on the CCI versus higher highs on the price. I won't draw the target for it yet until we see further declines on the price. That's on the weekly. Now on the daily, we did actually hit this resistance up here at 61.28 a couple of times, because I've got a double top there. Now you'll notice here we've got almost a double top as well on the CCI. I would consider that a double top, in line with that double top there. So that looks like it may possibly pull back from that resistance in the short term. But again, we'll wait and see. This could actually go higher, and if it does, and if this breaks a lot higher as well, we're going to invalidate that divergence. So at the moment, a slight bearish divergence on the daily. Now if you're trading on the intraday, we always take note of the higher time frame trading. So this is the intraday. So I've got the daily here as well. So here we take long trades only, as long as that CCI is above the moving average range. And that corresponds with, if I go back to this period, that corresponds to this area here. So you would have taken your first long entry there. Now that would have been a stop loss, or maybe a small break even on that one. Very small loss or a break even. We close it out when the CCI breaks into that moving average range. So you would have got out at the close of that candle, assuming you got in the open and close of that range. And if I drew a measurement there's 0.02% loss in 7 hours of trade. Now since then, the price has broken to the downside, then broken higher again, and you would have gone long on the break of that candle, and you would have, as we speak, you'd be closing it out now. So you'd be closing it out on that candle there. That's a 0.96% gain in 14 hours of trade. So that looks like it's going to break into that moving average range. In fact, it's already done so. So that's a nice little trade there. So again, we only trade in the direction of the higher time frame. So if the daily is going short like it was back here, you take short trades. And when it's going above the moving averages here, you take long trades. So that's the S&P. So I've got a similar story to the NASDAQ. On the monthly, you can see they've got a pretty strong bearish divergence on the CCI versus high highs on the price. So that's still hasn't actually pulled back yet. It's actually still rising on the monthly. On the weekly, likewise, we had another bearish divergence here, similar to the S&P. Pull back, hit our target range in that little, drawn in that little rectangle. And since then, we've got another, in fact, that hasn't broken higher yet, but we've got lower highs on the CCI, and that's slightly lower than that peak there. So I'm not going to draw it. That could go a bit higher. If it does, we're going to consider that a bearish divergence. But either way, look out for further declines possibly if this continues to drop on the weekly. On the daily, we had a bearish divergence during this period over those months. Dropped, hit our target, that 23-38% level. And if we drew a Fibonacci range on the daily, we take it back to before that, the significant low before that divergence started. So that would have been that area there. You can see that 23-38% level was breached. Hit that range, bounced out of it, and now it's hitting that double top almost. It hasn't quite reached that resistance yet on the NASDAQ on the daily. But notice the CCI is above the moving averages, similar to the S&P. Now if we go to the 1 hour chart, again we only take long trades. So you would have taken your long trades from, that would have been your first entry around that area. Let's just go back there. Yep, from that area there. Now you would have waited for that to break above on the price chart as well. So you would have got in on that candle. Now this one, you would have got out average range, which would have been on that candle there. In fact, let me draw it. It's a different tool. So getting in on that candle and getting out on that close of that candle. So in 11 hours of trade, you gain 0.5% gain going long there. Avoid going long or short during this period. Remember, we're only going long during the daily trend. Now, this would have been a couple of false breaks, but notice also we had a very narrow moving average range on the price, as well as especially on the CCI. I'd like to see some daylight in between those moving averages, like it was here, for example, or back here. So this is indicating a consolidation. So just be cautious whenever you see this very tightening area here. But even if you got in, you would have got out when that CCI hit that moving average range. So it would have been a break even or a small loss. Another false break there, break even or a small loss. And then another one there, you would have got out on that when it hit that moving average range, a stop loss in that area. So a few losses or break evens in that area. And then you finally got into another one there. Now this one would have paid off. You would have got out when the CCI broke into that moving average range. So that would have given you a 0.18% gain in 14 hours of trade. Another entry there at the close of that candle. And you'd be closing it out in the last hour of trade up there. So 1.01% gain in 13 hours of trade. At the moment, even though the price is pretty high, it looks like the CCI is pulling back. So we might see a bit of a retrace on the hourly. And then further upside towards this resistance, possibly. Just be careful. But again, watch that moving average range. If it starts tightening like it did back here, you might want to avoid trading if you're in that consolidation area. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.